Enjoy 1% merchant commission when you accept Lanka Pay cards. Contact these banks today.
Welcome to Times Online. Today we have Mr. Faizal Salieh, Chairman, Securities and Exchange Commission of Sri Lanka. Within 1.5 years into his job, this is the first exclusive interview for Times Online. We are delighted to have you with us.
Thank you very much for having me on the show.
What is your take on the journey of Sri Lanka's SEC so far?
I would say the journey so far has been marked with significant milestones, challenges, some rocky patches, and progressive steps towards ensuring a robust and transparent securities market. Several amendments were made to the SEC Act in 1991, 2003, and 2009 to address gaps and replace outdated provisions. However, a huge enforcement deficit continued to remain in the market for a long time. This has had an adverse impact on the image and reputation of the SEC as a regulatory institution, and even labeled the stock market as a pump and dump market.
For sure.
As the market grew in depth, sophistication, and maturity, it became necessary to initiate broader reforms to the existing securities legislation. So in September 2021, a new SEC Act was enacted. Under the new Act, the SEC has a greater degree of institutional dependence, expanded powers and jurisdiction, covering previously unregulated asset classes. We are now empowered to apply a wide range of sanctions, both civil and administrative penalties, in addition to enforcing criminal prosecution on market offenders to maintain market discipline, integrity, and fairness. The challenge before the institution for SEC to rise, perform, and deliver the expectations under the new Act and fulfill our regulatory role and responsibilities effectively and efficiently is very necessary in order for SEC to win the trust and confidence of investors. We had a choice in 2023. That is, to stay where we were or to leap into the next league of future-ready, proactive, efficient, and effective capital market regulators who have set the benchmark in the region. Our vision to be a benchmark regulator in the region, we have set an ambitious capital market reforms agenda for the period 2023 to 2025. The critical items on this agenda are capacity building and digital transformation at SEC's institutional level, the demutualization of the Colombo Stock Exchange, the acquisition of a real-time sophisticated market surveillance system and market supervision system, enabling the listing of SOEs, establishing a multi-currency exchange board for dual listings, establishing a multi-asset class derivatives exchange, introducing new products, increasing capital market literacy, both at the school level and university level. A modern and robust market surveillance system and supervision system are very much a priority on SEC's agenda, and critically important components to enhance effectiveness of our regulatory role and fulfill the obligations under the current SEC Act. The capital market is currently on a digitalization journey. A modern state-of-the-art market surveillance system will certainly enable effective market monitoring through system-generated alerts and trading analyses. Simultaneously, the Colombo Stock Exchange has to upgrade its surveillance system because it is the first line of defense. New footprints on the journey since 2023. The demutualization bill, which was stalled in the legislature since 2018, was revived in 2024 and is progressing with renewed traction after fresh agreement was reached between the SEC, the Government of Sri Lanka, and the stockbrokers. The procurement of the market surveillance system was awarded this month, and the supervision system is under negotiations. An enabling regulatory framework and a special exchange board, we call it the Catalyst Board, has been created for the listing of SOEs. The multi-currency board for dual listings is now being actively promoted. We floated an EUI for the establishment of a multi-asset class derivatives exchange. The preferred location is Port City. An enabling regulatory environment has also been established for several new products, such as regulated short selling through securities borrowing and lending, sustainable bonds, both green and blue, infrastructure bonds, Islamic capital market products including sukuks, and several outreach programs have been set in motion to increase capital market literacy at the school and university levels. We revised and strengthened the rules on corporate governance for listed entities and market intermediaries after a lapse of 15 years. We have introduced a scheme of financial fines and administrative sanctions for rule breaches based on the proportionality principle. This is to ensure market discipline and greater investor trust and confidence. Most of these revised rules effective from October this year, and some will become effective from 1st of January next year. We've adopted a proactive regulatory intervention approach where we directly engage with boards of directors when we see continuous red flags emerging in the operations of a company, rather than always resort to reactive regulatory enforcement actions. So that's our preferred approach. We've also liberalized brokerage fees and made it fully negotiable for transaction values over and above ₹1 billion, and this brings us in line with other comparable markets. On the enforcement side, we have rapidly cleared a large backlog of pending investigations and converted them into appropriate enforcement action. We have issued 31 notices to action on market offenders. We have entered into about 5 compounding and out-of-court settlements. We have issued about 26 warnings, letters of cautions and suspensions, and we have imposed about 29 administrative sanctions for failure of reporting financials on time. We are also closely monitoring the use of social media by bad actors to manipulate the market and have taken firm action against the abusers.
My next question to you was how you have settled into the hot seat of this chairmanship, but I think you articulated it also in your first answer, but please go ahead.
I saw my appointment to the hot seat in February 2023 as an opportunity to serve my country. I was aware of the negative perceptions people had about SEC, the institutional culture, and the huge enforcement deficit that existed at that time. I was prepared to positively face the regulatory and institutional challenges and do the right thing the right way. I believe I've settled in well, ensure fairness, market discipline, transparency, order, integrity, and regain public trust and market confidence. It is an incredible opportunity to drive positive change and innovation in the capital market.
Capital market regulator has had a very bad reputation in the past, especially over a decade ago. Like you said, regain the public trust in the regulator, which is really vital because now obviously people lean into this institution for fairness. The regulator is very firm now on capital market offenders, and they are basically pulling out files, so as to say, of past offences. And we have recently seen incident of many being reprimanded and taken to court and things like what you mentioned earlier. Would you be seeing more such incidents?
Yes, you may expect that because we have zero tolerance for financial crimes. It's something that any market should expect from a good regulator. The current act gives us a lot more teeth, and we will use our teeth to bite when and where necessary. We will never go on a witch hunt. We don't go after names, but we go after offences. Now have multiple tools to remedy a breach of the law and to punish market offenders. We have parallel legal remedies for violations of the law and administrative sanctions. such as public reprimanding, imposing a penalty, ordering restitution, etc. This is in stark contrast to the remedies under the repeal law, where the Commission was only able to avail itself of criminal sanctions or the compounding of an offence. Our enforcement actions against market violators are also meant to serve as a deterrent. We expect our actions to send a strong and clear message that unethical, illegal, criminal behavior, market transactions and offences will not be tolerated within the capital market and will reduce the frequency of new offences, though the transition period might still see several incidents as the market adjusts itself to stricter enforcement. The names of persons against whom enforcement actions were instituted are published on the SEC's website in terms of our publication policy. We believe that this will serve as a market deterrent. Also encourage more whistleblowers to come forward with information about malpractices and lead us on to more investigations and subsequent actions against offenders. All this must be seen in the context that the regulator is doing it to ensure fairness in the market and to fulfill its public interest obligation of safeguarding investors.
You mentioned that encouraging whistleblowers, Mr. Salieh. Has that happened?
We have a very strong provision in our Act now where the SEC can move in to protect any harm that might come upon a whistleblower for blowing a genuine whistle.
Have you also seen whistleblowers coming forward?
Yes, we have people blowing their whistles, and every whistle that is blown, we try hard to look at it dispassionately, objectively, and see whether there is a genuine case for us to pursue. Going forward, we would also like to be in a position to reward whistleblowers, like what the US SEC is doing. But that's something that we will have to work on.
The Colombo Stock Exchange and the SEC have introduced many capital market instruments over the past few years, but investors and traders have not really taken it up. Why do you think this is?
The appetite in the capital markets was severely restrained by the economic crisis, and then the subsequent domestic and external debt restructuring issues, the IMF reviews and disbursements. Whenever there is some misplaced political statement made within or outside the parliament, the capital market reacts. And now we have the presidential elections around the corner. So the market has been extremely sensitive to small issues, and that's how it has been working. A liquid market is essential for the success of new instruments. Investors seem to be more comfortable with traditional instruments like stocks and bonds. New instruments might appear complex or unfamiliar to them, and therefore deter investments until a broader understanding and confidence is developed. General market sentiment influences investor decisions and their willingness to try new investment options. So the SEC and the CSE are in the process of conducting several awareness campaigns about the benefits and risks associated with the new instruments that have been introduced in the market. High interest rates with fixed income yields around 20% caused a general investor aversion to risky asset classes despite their potential for high returns, and deterred investments coming into the capital market. This always happens whenever the interest rates go up in the banking space. But recent policy rate reductions, I believe, should encourage investors to come into the security market.
To resume their trading.
Yes. But having said that, we have all the other uncertainties at this moment of time, which does have an impact on investor sentiment. We also must note that the economy grew by a little over 5% in the first quarter of 2024. compared to about 10.7% in 2023 in the first quarter. This recovery in economic activity should have a positive potential impact on the capital markets. Post-elections, we will have to see how the market revolves itself.
The multi-currency board, which was spoken about for about a decade, finally came into fruition about 6 years ago, allowing foreign companies to raise cash in US dollars. But no one has listed on it still.
The multi-currency board was also set up actually to assist foreign listed companies to dual list their shares in Colombo bourse, despite there has been, you're right, little interest. Various factors such as the economic situation, exchange rate volatility, restrictions on capital transfers have acted as impediments. But we remain optimistic that dual listings will gain traction in the future when these restrictive factors get addressed in due course. And this is something that we are working on.
You had a landmark memorandum of understanding with the Maldives and had a series of one-to-one meetings with your counterpart there. Did anything come out of it?
So the CSE immediately held one-on-one meetings with several Maldivian listed companies. There has been some active discussions between the two exchanges and the listed companies in the Maldives. These discussions are continuing, and the CSE expects at least 2 Maldivian companies to list on the Colombo Stock Exchange.
That is absolutely interesting news. What are the new initiatives that SEC has put in place for broad-basing the capital markets in the country? And will we see new regulations and directions for strengthening the same?
Soon we will be signing an MOU with the Institute of Chartered Accountants, ourselves and the Stock Exchange to bring in this common language of reporting, enhance the efficiency and effectiveness of the market supervision process and the investigation process. So these are very necessary. Robust trading platforms, clearing and settlement systems, surveillance systems and depository services are critical for market confidence. DVP is already in place. CCP should be established by the CSE. We were expecting it to be established last quarter of 2024. On the outside, it might be in the first quarter of 2025. The trading settlement cycle has already been shortened from T+3 to T+2 effective June this year. And CSC has given us a commitment to take it to T+1 by 2024 last quarter. We hope they will be able to keep to that commitment. All of these will reduce risks in the market, settlement risks. Our eyes are on the ball on which areas require development, which areas require change, which areas require very focused action. So the Commission and the market institutions and the market intermediaries are working together in trying to build all of this.
This is very ambitious of me, but what more can be done to have a smooth functioning of the market? I mean, you've listed so many, but can you think of anything else?
The new challenges that would evolve and emerge from a growing market. We bring rules to address emerging and potential risks in the market. Every rule we write is based on a principle. Our rule-making process is principles drive rules and rules address market risks. So it is a balancing act. So we will also simplify the process for companies to raise capital through the market. We would like to reduce the costs and complexity of IPOs, for example, so that we can enable more businesses to tap the capital market for their long-term funding requirements. Despite the potential advantage of REITs as an investment product, the 4% stamp duty applicable by provincial councils and the 30% capital gains tax are significant impediments for REITs to take off as a viable product. So the SEC will continue to engage with the relevant authorities to address these issues and unlock the full potential of REITs in Sri Lanka. The argument that corporate governance should have stayed where it was 15 years ago is not a tenable argument, because all other markets around us are improving corporate governance standards constantly.
And it is giving equity to the market participants.
And it is giving equity. Investors, what is ESG? ESG has a strong G component, governance. Whether it's environment, society, or whatever, it's governance that investors are seeking. We will also facilitate the introduction of ESG rating systems and also an ESG index to showcase and create greater visibility for listed companies with sustainable business practices, so that they can attract more institutional investors. So the Colombo Stock Exchange will work on this index as well. We will engage in continuous consultations and collaborations with other regulatory bodies to ensure policy support for market-friendly initiatives.
Finally, Mr. Salieh, compared to your regional peers in the capital market, how do you rate or position, or what is your opinion of the Sri Lankan capital market?
Our capital market has shown progress over the years, particularly in its statutory content, the regulatory enabling environment, new product introductions. It has lagged behind the regional peers in terms of size, liquidity, investor diversity, innovation and competitiveness, market performance and stability. The market is skewed towards few high net worth investors. Very limited independent research is being done. There are too many brokers for a market of this size, and their investment advice is not always based on business fundamentals. Our unit trust industry lacks innovation and vibrancy and appears to be very comfortable offering plain vanilla money market products to investors. Now, we have given a clear, strong message to the market intermediaries on the need for innovation and growth. And we will evaluate them rigorously when it comes to renewing their operating licenses. Businesses should typically lean on the capital market for their long-term funding requirements, but they have mostly relied on short-term bank borrowings, creates a misallocation of capital in the financial market between the banking space and the capital market space, and elevates the balance sheet risk of banks. So we have initiated discussions with the central bank on this aspect, and we will explore prudential methods to rebalance the capital allocation and systemic risks between the two markets.
This interview became interesting and innovative from the get-go, Mr. Salieh. Do you think justice delayed is justice denied?
Yes, I think there is a lot of sense in that statement. That is why I keep harping on timely enforcement action. From our side, we need to move very quickly from picking up market abuse, market manipulations. We recognize the need for this, and we are investing in a world-class market surveillance system exactly for that purpose. Our investigation process efficiency has to improve, and we are working on that too. So we are setting KPIs at the Secretariat for our investigation units. Enforcement has two sides. One is if it's on administrative sanctions and other processes that we have, it goes into litigation. We have to work through the Attorney General's department, and then it has to go to the courts. So that process is beyond
your control.
Our control. But having said that, we are in active discussion with the Aegis department to see how we can improve the process, building greater awareness, State Council level in the Aegis department with regard to financial crimes, how financial crimes are seen in other markets, how enforcement against financial crimes take place in other markets, how serious are financial crimes. The Aegis department has positively responded to our request to work together.
I will describe this interview as a landslide of information, and thank you very much for joining us amidst your busy schedule and allocating your valuable time for Times Online. Thank you very much.
It's my pleasure. Thank you.